All right, welcome back to the Washington State Investing Podcast. So excited to be here today with Derrick from the Tri-Cities. I've been trying to get somebody from the Tri-Cities, so I appreciate you being on the podcast today. Let's get started. Why don't you tell listeners a little bit about your background?
Cool. Hey, Jeff. Yeah, thanks for having me on the podcast and help you to share a story about Tri-Cities in this kind of pocket down in Washington State. So my name is Derrick Stricker. I'm a second generation commercial real estate person, but I found it on the backside of my career. I was kind of raised up in Tri-Cities, Gonzaga alum, thought law school was supposed to be my life, and went a lot of political routes and internships and steel industry and DC and public, 04 election, and realized that's not what I want to do. And so business became my focus in the tail end of college. Ended up getting my MBA in finance and going to Chicago. And I kind of had a career over there in Chicago in kind of finance and investment banking. And that last 2008 recession followed out everything. So I learned a ton in my 5 years in Chicago and came back and realized I wanted to be in real estate. And I kind of saw that growing up. And I knew Tri-Cities, if I gave it 10 years, I knew that we know if we could have a long-term success in Tri-Cities. And so I'm a commercial real estate broker, 12 years in Tri-Cities, kind of started a kind of a mom and pop with my mom and pop, and kind of gone through the franchise and the NEI and the things, and started my own firm 14 months ago. And so now Stricker CRE, we do commercial real estate, all forms of it, and property management. And I kind of have a focus of industrial and office and investments. That's kind of what I kind of do, but have a team here in Tri-Cities and pretty optimistic about what's in front of us, no matter what the headlines say.
I like that. And when you're property management, is it property management for commercial real estate? Correct.
Yeah. Our PM is solely focused on commercial real estate, and we do most things except multifamily, and so I have an SIOR, which is that Society of Industrial and Office Realtors. And so I really had especially during COVID times, that flex of industrial and that need and that helping, definitely was the thing to lean on and also upside. So a lot of that, but no multifamily. And we probably manage about a $55, $60 million portfolio, about 12 properties of office, retail, and mainly, B plus or greater is kind of we try to, more boutique, less is more, and try to focus on all elements and learn from that PM hat and the focus and how we apply it as a commercial real estate investor and broker and the whole part of the deal.
I love that. For people who aren't very familiar with the Tri-Cities area, Pasco, Kennewick, Richland is where we're talking about here, kind of southern central Washington State. Can you kind of just give us an idea of what's the real estate market down there, population, kind of what are you seeing from a real estate side?
Yeah, so we're 3 cities, or sometimes say 5, right? I mean, it's right, so West Richland's in there too, so 4. But we're a town of, MSA about 350. And using the term MSA is kind of new to Tri-Cities. We're all kind of individually, kind of like Pasco Richland and Pasco Proud. And hey, as a broker and selling the community, it's like you got to rise up collaboratively together, collectively.
Yeah.
And so I think the last 5 years, really, Tri-Cities MSA has got bigger. But, what's driving it is we're, the second largest city besides Spokane over here. And what kept me in what I thought was in Chicago was if we can turn into Spokane long term, and not just size, but just how they did it. We could have a long term success of economy, sustainability, innovation, and I could own corners of the whole market and be in a different life down there, and still have that opportunity because it wasn't so many players in the bucket trying to do the same thing because it was a small town USA. But I thought if you could scale it right, and so anyway, you got these 3 cities with 350,000 people. We have room to go 500. What we have is sprawl, which is also our biggest downfall because we want to go up. So how do you urbanize but go out? And so it's a clash of cultures. Pasco is your agriculture, your food processing. Richland's where our highest PhD per capita is, right? And, we still get $2 billion a year of DOE money. No matter who's president, that's kind of happening. And so that's a lot of its own thing out there. But it is getting a lot of steam and a lot of green stuff, which green or not green, it's all happening out there. And government stuff. And then Kennewick is your catch-all. That's where our real estate, that's where CPA, that's where your attorney, that's where your Costco, all that kind of stuff is in between because we don't have one collective downtown. We all had 3 individual cities back in the 1950s. And we also are merging together like, hey, maybe we should be friends, So it's new, but it's I've seen it double. I was 150,000 people in high school. I graduated 2002. And I got all the old schools going along back then, which continues to be a theme in Tri-Cities. I think we led the state for a couple of years of most new schools being built because our growth rate and our population, and we're not stopping. And we're just not at a big market to kind of get all that attention or have access in to understand exactly this Tri-Cities anomaly ecosystem thing.
Yeah. And it is an incredible market. I will say my other job is in education, and I spend a lot of time down in the Tri-Cities. I mean, the growth at Pasco School District alone, just that school district alone, has just been outrageous.
For sure.
And then with Richland and Kennewick right on their tails, I mean, it is just, it's a booming area. And I think it gets overlooked a lot from an investment area because people just don't understand it. And people are always telling me, they're like, yeah, but it's agriculture focused. I'm like, well, that's part of it.
Exactly.
But a lot of people, I think, miss that Richland side of things. You've got the Hanford nuclear plant there that, to your point, is going to be bringing in government money. You've got a huge scientific community there. I think there was something I was reading, and I'm going to get the stats wrong, but I was reading an article not that long ago where they were listing like the top 50 scientists in the world, and something like 30 of them had come through Richland.
It's like the Euroball for the professional players going, I'm going a couple years Euroball and then go back to the pros, right? Because they're all there. And so I wish we had that, CBA basketball team, Legion too. But it is. We have some very smart people, and now it's the access to capital from the government side of it, and the private side is finding its way there to give it. And we haven't had tech before. You had ag, and the biggest thing that hit too is wine. Actually, right? That's the biggest thing that's hit in the last 15 years. Is you had all the Canadians come down and buy the whole AVA, mountain, and we have now, whatever it is, like 1 out of 5 wines in the nation. The grapes are from our area, and it's we're the new Napa in a lot of ways, and it's starting to see it as it popped. We haven't seen multipliers, but like that's our tech money that kind of came in with affluent people. And seeing what they do now, once step 1 is get capital invested in the area. Step 2 is start making moves with it. So you have some silent players kind of been there last 10 years. Like, what are those big players going to do? How are they going to pivot? How are they going to acquire? How are they going to bolt on and take advantage of Tri-Cities opportunity?
Yeah. I love that. Let's talk a little bit about commercial real estate in the Tri-Cities area for those that might be interested investing in that area. We hear a lot of negative things right now in the news around around commercial real estate. I'm here in Seattle where, it's the headline of the news. We're only at 43% or 48% or whatever the number is of people coming back to downtown. How does that differ from say a place like the Tri-Cities where you're at?
I mean, it's exactly what it is the tale of two parts of the state. And, and from policy on down, but it is, I was there. I was in CCM conference in Seattle last week. First time they've hosted it, I think, ever. Usually in Chicago, Austin, Nashville. So you had a ton of people, highest professionals over in Seattle for the first time in a long time. And a lot of international dignitaries kind of came over as well. But 38% vacancy, office vacancies. Everyone's moving for the east side, Bellevue, right? They're all moving out of, and we were at the Hyatt Regency. And all the bartenders and baristas, that's who know the best information, is broker or consumer. You go to those people, or the doorman, and you're like, hey, is it this bad on here? Like, well, no one's here. It's all remote. And so they've taken over the town. There's no need because remote is a thing. Well, it's slowly coming back. But in Tri-Cities, unless you came here from Tri-Cities in 2020 COVID stuff to remote, and I can sprawl out and get lots of things and water and sunshine. We don't have that here. Our jobs are not remote, and you realize, I can do my job remote, but I'm way better in office. Or if I'm a small business, the makeup of Tri-Cities is a lot of DOE corporate stuff, or you have a lot of agriculture, or a lot of family business. So you don't have that giant vacancy or culture clash of go back to work, come back to work now, and the intangible tangible. So we're just adapting quicker, but since we've never been overbuilt, and I complain more about us having supply issues of, especially in good times, we don't have more than 4 or 5 things of anything. So our economics always kind of hold that steady eddy. So in the down times, it's like, see, I told you so. But in the up times, I'm like, we could be at 10% GDP, but you guys are clapping 3.5. Like, no, like get more, want more. But so it's a clash of the two. So we don't have vacancy issues. We have some office stuff, but really what we're inheriting is that attitude from the West Side, other markets saying, hey, it must be bad here too. I want to talk about discounts and what might be good down there. And like, I hear you. And there's some tightness in these ecosystems and maybe classification classes, right? But like that discount mentality isn't in Tri-Cities. We're still trying to find good properties and good areas with upside. And so, we're not shopping on cap rates. We're looking at cap rates. We're looking at like, all right, what's the market rents and how long are the renewal terms? Are they in underutilized area? A little bit more of that astute investor now is getting past that cap rate and looping that ad and saying, all right, out of the 3 of the 5 things, what's looking good? And that's what I think is that investor that's got a little more patience saying, because, hey, I always think that as a broker, you're shopping me. And we're all looking online, right? Hey, I'm looking at Moses Lake, I got Spokane stuff. This one in Pullman I kind of like is my son, we're all looking at stuff. So the internal part is we have room to grow, and our market rents are still below a lot of, I think, where they should be. And looking back in 12 years, and former economics guy, they should be much higher given what the inflation, life, cost of living, and what it costs to build this now. So it's actually, I see it's a pocket of adjustment coming in the next 10 years of that. The hard part is we're fighting taxes and insurance giant increases besides the actual cost of economics right now too. So there's a lot of costs coming on the horizon for everyone involved without even changes.
Let's talk about that. What are you seeing right now about just getting in the real estate investing game? We're kind of in this, I don't know, you can call it weird times if you will.
It's weird. It's weird and unknown because every quarter it changes.
Changes.
We're so used to it changing, so we're like, hey, you know what? Let it change a little more. Let's wait one more quarter, let it change, then we'll come back in there. It's like playing double dutch almost. Like, when do you want to jump in?
That's a good way to put it. So what are you seeing, and why do you think is now a good time to be getting in the market? You're mentioning some of these ideas about if you're looking long term, this could be a really good time to get in.
I just see how hard it is to get in. There's never a good time to get in. Like, there's never, I guess, not a good time, and never a perfect time. And I think it was like that from the outside looking in. It's like, okay, and this is me in like 2013. Okay, if I spreadsheet this out, I'm a spreadsheet guy, right? I talk a lot, but it's data driven from the spreadsheets. And, how can we stay focused on these numbers and do stuff? And you see that. Lost my train of thought. Bring it back there real fast. Where we go?
Yeah. Yep.
Jeff, will you ask that question again real fast?
Yes, I can ask.
Sorry.
So ask that whole thing
Just
again.
That last part, yeah.
Yeah, we can do that. All right. So let's talk about just the real estate investing game right now, and whether or not this is a good time to get in with I love this idea that it's crazy right now.
Yeah.
The market's crazy right now. What are your thoughts on whether or not this is a good time to get into real estate?
Totally. I think I've learned over my 12 years and from being on the sidelines to getting in the game that you just got to get in. And there's actually no perfect time to do it. And even in the great times, you could, I wish the cap rate and the dollar and the thing and the timing and these intangibles. And I've seen clients, myself, my family, have these great ideas, the innovation of we should do it. What do you think works there? And pencil it out and not do it because, hey, the thing could change and the city council and looking back 5 years and now having enough years looking back, I'm like, wow, those were all right. Even if you got a B-, you were still right. And so, hey, if I don't get in, so we got in, we didn't, the first thing I did was I did a development, which was not my favorite thing to get into because that was awesome. But as a first thing into it, that was like 9 case studies in one versus let's just buy into something that's already existing versus adding all this kind of stuff on it. But I came back with like, let's do 20 years and 10 years, 20 years experience in 10 years. And then I don't know what we can do. But back to, you got to get in. And right now is, hey, getting in is more than just the actual ownership. I mean, there's accounting things you get to utilize into your lifestyle. You can do a lot of things with your family. You can do a lot of these other tangible things besides just the actual cash flow itself, or the point of return, or what you're buying it for per square foot. I see this commercial real estate as living and breathing, right? It's more than just a metric, and they do. They cycle. They have iterations. They have spans if you pay attention to them. So I say we got to get in, and interest rates is the new reason not to do it, right? Oh, hey, I can't. Right. I'm a first-time investor. What can I do?
There's always a reason not to get in, right?
Yeah, I always say there's 87 ways a deal dies every day, right? And they're all good. They're good, legit. I totally understand, but you're now not getting in the game, and we're still not moving forward. And now the cool conversations and things. Oh, hey, you need to break out your revenues. You should offset your depreciation with that. Oh, you didn't buy it. Okay, well, hey, that's probably the $17,000 hit that you just could have avoided, actually. Yeah. What do you mean? So I've seen the adjustment of the clients, and I've seen that from the investors coming outside the Tri-Cities say, hey, it's not just cap rate. Where's the growth areas of Tri-Cities, and where can you place capital? Knowing the first couple of years, we're all thin. A we're all adjusting to the inflation. So how can we look bigger than just what that is? We thin now, but knowing that, hey, long-term renewals was a hot thing. Now short-term renewals are hot. Hey, let's get a broker like me. We get management. We get strategic reserves. We know we're going to go from modified gross to triple net. We're going to do these things. We're going to improve HVAC. You know, like there's a strategy here besides just raising rents. And so that's the upside. So people are like, hey, I want to get in. Well, we got to start working on that. And the hardest thing is just saying, I feel good. We just got to go for it. And if you can afford it and you're not squeezing yourself out and there's a play, you have a plan B with it, you know, you're not stretching yourself, there's still a plan B play. Hey, if you're taking it, but you can sublease it. Hey, you could take it, but assign it. You could do whatever that play is. Okay, cool. You can be a little more confident in your toes going forward because I think even in weird times, that's where you find opportunity. And that's what Chicago '08 taught me.
I love that. I really like that. I think that's so profound and just something to constantly be thinking about, you know, you're right. Like if, you know, interest rates were down at 2%, but everybody's like, but I can't afford to get in because there's 30 people that are, you know, bidding $100,000 over, right? There's always a
they put 200 grand down, earnest money. I only have 50. Yeah. Because we're all playing on that strength card. So what other card do you have in your sleeve? You got to keep playing the table, even if you're shorthanded to keep in. And then all of a sudden you're like, wow, I'm so glad I got in because I had even though that cash flow kind of sucked or that squeeze felt terrible, wow, my CPA is super happy and I'm happy. And then the tenant did the thing and all because the juice is with the squeeze, you know?
Yeah, I love that. Let's talk a little bit about the rise of tertiary markets. What are you seeing in that space? I don't know a whole lot about that space. So even if you can just kind of maybe explain what those markets are, and then what do you see in the rise?
Totally. And I think, you know, tertiary being like secondary, third-dairy, you know, MSA wise, you're well below 500,000. I think that's kind of what qualifies that. Okay. And I think that was the biggest issue when I came back to Tri-Cities from Chicago was how can I scale my business? And I don't want to just, you know, make 100. I wanted to scale it and find margins and do good stuff with it and, you know, create 100 to 350,000 people, you know, the Moses Lakes, the Yakimas, the Tri-Cities, the Hermiston, the Prospers, the Wall, like all these kind of pockets where you ever know, oh, I have an aunt from there. Oh, my cousin lives there. Oh, you know, like, oh, I love wine, you know, whatever it is, right? It's a connection. But like, no one knows what the hell we do out here, you know? Yeah. so the rise of tertiary is not just us in Washington State, it's all over. It's Salem, it's Eugene, and Bend, Oregon. Boise was a tertiary market. And they used to, you know, so like true. You see these things of, you can find them as pockets. Well, what makes them? And usually like a natural, you know, outdoorsy thing that helps add it. Well, we have the Columbia River. You know, we're the third largest river. You know, we still have the hydroplane races, which is big for a lot of people. Some people, you know, I don't know why we don't have like a pro wakeboard competition set up here yet. I actually tried like 12 years ago to help. Like, hey, you need to get Parks Bonifay and all these dudes back in the day. You know, like have fun with it, but they're still worried about like, you know, paddle boats and stuff. Anyway, so they rose because people were like, oh, hey, are you really like $70 a square foot? And you pay a double? You know, like, I'm used to paying, you know, $19 for a Frappuccino in Seattle. $6 and similar stuff looks pretty good over here. So all of a sudden, like, hey, these other markets, what do they have? And they're investing in access to brokers is always tough, but like Moses Lake is blown up. Wenatchee is blown up, right? There's two Wenatchee, and I got East Wenatchee. So good, they got two. So all of a sudden, you know, hey, Yakima's on the rise coming back, but Tri-Cities kind of has a gravitation, but you're seeing people make money, and that's kind of driving more investors, more listeners, more followers, because commercial real estate was really like, I feel like, you know, barbaric and analog when I came in 12 years ago. And it's still very much behind and catching up and all that stuff, and a lot of focus and more money behind it. But the rise is this. They can do well. What was unknown is now known. We now have information. I'm not saying CoStar thank you, but a little bit thank you maybe to help get some of that stuff out there and known as like, okay, hey, it's not just some tumbleweed broker telling me some fluff stuff I don't know about, and you know it's all good. You know, he doesn't know what triple net even is. So, but that was the first few years kind of battling like, well, hey, do you even know what you know? And it's like, hey, I'm gonna get my CCIM. I'm gonna get real fast. You know, just these things that I never know that even we live in a smaller market, but we know the same methodologies. We know the same foundations. You know, well, you break down a 50,000 square manufacturing versus 5 million. It's very similar, but different. Yes, but so I think that's the rise, and the rise is, hey, COVID, money, easy to get to. All of a sudden, everyone's competing in the big city, but they want to get in the game. It's easier to spend $250, $550, $1.25 in our markets versus getting you half a condo, you know, in Seattle. So I think that funnel through these tertiary markets and the industrial kind of, hey, every market, no matter how small, needs a good industrial footprint. Or these national firms need these things, and or if Amazon doesn't. So between like logistics and distribution and the industrial footprint, those and the tertiary markets kind of gave life, because you can only have so many QSRs in a corner in a big city. So you have to come somewhere else.
Yeah, and I love that. And if you're not familiar with Washington State, you've got to just go find a map and just find where, Kennewick, Pasco, and Richland are, and you can see what we're talking about, especially the distribution end. I know Costco, I think, is building a big new distribution center down there. You've got some big ones, whether just on your side or just in Hermiston. I think Amazon's got a big distribution center there. Yeah. FedEx has got a big one up there. I mean, it just really is. I mean, it is a combination of roads, and that is a driving force in today's, everybody buying stuff online, and you got to ship this stuff. That's definitely a driver in the area.
It is, and it helps when you got the kind of industrial anchors there, so that some of the retail can kind of follow suit. The bigger brands are, if you got there, I know we're small. So I think like corporate finance, corporate real estate, my former life, like, hey, they're adjusting their requirements and markets now. It's like, hey, we can't have 37 of these in the Seattle market. We got to have, we probably have 3 in the Tri-Cities and 2 and 4 in Spokane and 1 in, so it's fitting, they're refining their search requirements to markets like ours because there's opportunity.
Right. I like that. Let's talk a little bit about being a commercial real estate broker. How do you, reach out to someone like you if I'm interested in commercial real estate? How important is that partnership and being able to, I guess, closely define what you're looking for when you're working with a commercial real estate broker?
For sure. And I think we didn't disclose this early enough, but I'm in a Halloween outfit, and I don't always dress this way. And the guy liner is optional sometimes.
If you're looking at the video version, you're like, what is
this guy is really...
We are recording on Halloween. Yeah. Sorry, we should have start. I'll say that in the pre-post.
Okay. Yeah. You find a broker who's full commit like me, right? And it's all in. That was all on point. No, I mean, I think it is. The brokers have the information. We're living this. I feel like my job's kind of like part athlete, just to kind of get in it and know it and read it and digest it and think it, sleep it, so that when I talk to my clients, I'm just plugging them in. Versus like, hey, this is how we, and there's part of that true, but I, worked on kinds of clients. So as a broker, brokering deals, and helping find investors, I think is reach out, look online, who's got listings. If they have listings, they must have some credibility to keep those listings and keep those clients and, those kind of things. And hey, what do you need? What are you looking for? And I think the best thing what I do is, I always qualify as a broker, and as a consumer, yeah. I'm always qualifying. Either they may know it or not know it. And so how busy are you? Do you have bandwidth? These things I ask myself before I what's this coming down? Because let's all be up front. Hey, what are your expectations? Oh, hey, I talk once every 2 weeks. Okay. Does that work? So as a person looking for broker and information investing, I think, hey, being up front with what you're looking for. I don't know what I want. Hey, that's a good thing. I have some capital. I'm interested in the area. Could you send me some information on the area, or some recent deals you've done, or recent deals that you thought would be interesting for me to learn about? Because it's hard to come in and like, hey, sell. It's like, well, here's information so you can kind of acclimate yourself to our elevation of Tri-Cities MSA. And is that higher? Is that super expensive or super cheap? I don't know until you acclimate what's going on, right? At CCIM, I learned that in Vancouver, BC, flex retail is $100 a square foot plus net. Holy smokes. Wow. That's 5 times Tri-Cities on brand new costs. But like, you don't know that until you acclimate, right? So ask your broker that information and say, hey, this is what I'm looking to do. This is, things are changing. And I would say this, be broad, because in tertiary markets, we have one of every 3 things. So if you want to digest the information and actually be engaged with the broker, you probably want to have a little more stuff to look at and talk about. Because I think if it's, hey, I'm looking for 3,000 square foot, a single tenant, a triple net rent for sure. And it's got to be in a good corner, built before, but after 2015. And okay, well, hey, you may not talk to me for 6 months because that thing isn't come up in the rotation for me to get the thing. So how can you help us by kind of engaging with what you want to do and being a consumer? And I think some of my favorite clients are ones that play the sport with me. We're all jazzed up about it. And we're not even just doing the deal yet. It's just like, oh, did you see that? Yeah, hey, I know. But if I thought, I would have actually valued it. Oh, good thought. Like that's who's on the top of mind radar and is exciting to do deals with. It's just as a broker talking to clients. And not all clients that way, obviously. But you can find them. And I think, also from an outsider investor, find a broker's personality that kind of fits you. Sometimes it's hard based on size, location, and market, and number of people who are guyliner. But but it's like reach out. But I think this: be upfront. State what you know and don't know. And sometimes, and I think that helps educate the admin who might be filtering the actual email to help get it kind of set up. But I think, hey, state what you want, be open about it, transparent, and try to buddy up, because I think that helps flow information and top of mind awareness, because it's so easy to get caught behind in the 1,000 things that just kind of notification, in front of us.
Yeah. And I think it's so critical, everything you're talking about. I just think, you can go on places like LoopNet and you can find the property. Yeah. But that property can seem very expensive or very cheap because you don't have the equalization as you're talking about. You have nothing to bounce it off if you don't know the area,
Totally.
To your point, if you're taking square foot cost in the Tri-Cities and comparing them to something that you're also looking at in Seattle, you don't have a baseline. Like those two things are so different that, having a broker that knows the area, that knows exactly what you're looking for, can help you equalize those numbers, I think is so critically important. And the reason why you reach out to local brokers who know the market that you want to invest in.
Totally. And I think that honestly, it builds the trust that needs to happen prior to the deal occurring. Right. Mm. And it's like, hey, you want them both everyone to know that they're trusting real-time information, that's trusted, so that the process, hey, if we say go, we're all in the same boat. Sometimes it is, we're all competing, right? The last 2 deals got under contract in the last 10 days, we actually bumped the person in front of us. Like I won both those contracts because we came in hot, came in strong, came in, a little bit of intangibles, some write-ups, some things. And so that helps because that trust was already there with that client who's a new client. So I think that really kind of goes a long way too.
I love that. Do you mostly work in the industrial and office space? Do you do large multifamilies? Like when you're as a real estate broker, where are you? What's kind of your lane?
Yeah. So, a focused generalist, I call myself. No multifamily basically is what it is. So we do office, industrial, self-storage, retail, land, but just not the multifamily. It really just changes everything. And it's always easy to want to try to do it and an investor. Yeah. But, I just kind of refer to another good partner that just handles that, the sole focus of that. But, I focus on industrial and office, but in a tertiary market, you're going to be able to kind of ebb and flow with what's going on. Hey, leasing's quiet. Okay, selling's big. Selling's quiet. Selling with financing's dead. Okay, seller financing's super alive now. So what are these things we can kind of ebb and flow to? So we're just trying to be, cognizant of, aware of kind of what's coming at us.
I like that. I mean, and again, I wanted to ask the question for listeners who are, thinking that, I need to reach out. I'm looking for a big apartment complex.
Totally. I mean, there's some here, and that's kind of that's what's made some of the tertiary markets rise is the CBRE, the Marcus Millichafs, and the JLLs came in with some REIT money, some PEs, some pension funds, whatever it may be, right? And bought up those kind of B- value add, or even some of those Class A that's kind of happening no matter what. And now they're kind of here, some broker. So now it's kind of that attitude that pathway is kind of open through the multifamily channel. That's got its own struggles, but opportunities now too. But that's kind of been the one that's been the strongest, besides the industrial kind of corridor. That's kind of opened up these gateways to kind of these tertiary markets kind of stuff. So everything else we do here, office, industrial, but self-storage, big on that. And that's what I've invested a couple of those into those things. So it's great to learn through these transactions, these clients who've been doing it for years or have lots of portfolios that I hope to have one day, and just be a student, right? And just be a student of the game and learn more every single day.
Yeah. Where are you in your own portfolio, your own real estate investing growth?
Let's see. So we developed one project in 2014. It was a 3-tenant retail ground up development, and that was great. Great case study. Like I said, I wouldn't do that again as my first thing. Yeah.
It was a good education, right? Your first one's always a good education.
Exactly. Good or bad. It was a home run on the exit. It was great. And it was neat because it was a home run because of the basics. It was a blocking and tackling. Great leases, great structure, great fair rents, all the stuff, all the mechanics that say, why am I pay this kind of thing? But this baby was handled so well. It got that extra value in the back end. And that taught me a lot, but also, hey, how hard it was, how long it was. But anyway,
Yeah.
sold that, and that was a great thing because, hey, I didn't have a lot of capital, and that was the one thing I kind of had. So now I'm back into owning an office property, the office that we have our commercial real estate office in, right on Gage here, right across from Costco, easy to get to, and that kind of just happened. I wasn't planning it. I'm a planner, and that just omen was like, hey, let's broker the self-storage units behind us, and that kind of came into it. So I'm a partner in this office building. I'm a very small, and I became a very passive income investor in a few other properties. And that was weird to me because usually, I'm the pseudo developer. I'll put it together, LLC, all the sweat equity, role kind of thing. And I kind of bought into more of a regional machine to learn from it. So I have 9% ownership in this self-storage behind me. I have 10% in a different car wash or a mini storage up the road from a deal we did. And I own under 20% on this car wash in Lake Chelan. And so all in the last 2.5 years, 3 years, this all happened, which is kind of crazy. But I'm just doing what I'm telling my clients. And I really feel good about that now because I really feel that in your tummy, what it's trying to do. So those are my 4 things. And we're expanding right now, actually. I tried to buy it, didn't work out. There's a warehouse down the road from my office. And we're expanding my property management team and kind of some creative space, flex space, kind of Rob Dyrdek Fantasy Factory stuff to do down there. And so I have some room to kind of grow just down the road. So right now, those are my main things, and just watching and learning, what's working, self-storage struggles, car washes do terrible in December, things I didn't know. Yeah. And, I'm brokering a deal right now, a car wash in Richland. I just won a contract when I said I bumped out a guy. Yeah. Hey, I have a whole new set of understanding of that thing as an asset, check the equipment. What year is that equipment? Hey, they're going to tunnel wash, all these things. So I got to bring that to my clients now, that value, without saying, hey, you learn that shit. You grow on your own. It's like, hey, I want to keep bringing new info nuggets out that way. So it's been cool as an investor to grab it and see now, I'm scared now. It's, hey, can we do seller terms? Can we do other stuff? And so it's one more thing that I'm just staying in tune as a broker, as a market dynamic person, and as a client, and consumer information for my team, my clients, and myself, in real time.
Yeah. And I think that's the thing, just listening to you, and I can tell you love this stuff that you do, your passion comes through. And I think one of the things I love about investing in real estate is everything you're talking about. There's so many different ways to skin the cat, right?
For sure.
There's always a way in, a way out. You just have to, sometimes you got to be in it longer, or you just got to think a little different. Yeah. There's always I just find there's always, if it's a good deal, if it's a good property, if the numbers work out, there's a way in it and a way out of it that's going to be beneficial. And it's just, partnering with the right people and figuring out what those, the little nuances are. Those are always the things that I love doing as well. I just love figuring out how do you make this happen? I know it's a good property. How do I make it happen? Right?
Exactly.
Having the right partners is
it is, because at the end of the day, you're always is this the right answer? There's no actual answer for it, and I don't quite know what an answer is. And a lot of times, hey, we actually don't know. We're just adjusting and advising on what we believe to be the truth based on information and stomach, that gut feeling. But every time that I've gone through it, and it's been thick and some hard times in the last 15 months, I've been so thankful I did it. These other intangibles happened because of it. I couldn't expand my PM team to give some space unless I did this move over here, which last September I hated doing. But wow, I see that. So as I approach it next time, or for my clients, hey, I hear you. Is there anything intangible or life cycle or lifestyle that could make this work better or take against you? If this happened. And so that's what I do when I talk to my clients. I'm like, hey, we're talking tax base. We're talking next year. We're talking, are you hiring, selling? We're talking multi-level stuff, not just slinging a property at you and let's get it underwritten. It's hey, how can you most take advantage of this asset?
Yeah, I love that. Well, Derrick, thank you for spending time with us today. I really appreciate it. It's great to meet you and to just get some thoughts on the Tri-City area. Again, I think a very underutilized, underappreciated area of our state that I think really needs to be on investors' radars. And the commercial side of things, to your point, the industrial that is really driving, I think, that area right now. The commercial's right there I mean, there's just a lot of things happening in the Tri-Cities, and I think it's a great time. I keep telling my wife, I'm like, we got to get in. I mean, it's always a great time to get into real estate, right? That's my thing. Like, we just got to get in. We're really heavy in Spokane, and I just want to, I want to
drop down in some other areas.
What
it is. Hey, I was kind of noting an article last night because Natural Grocers opened up, and Trader Joe's has been like flirting with us for a decade, right? And I don't even do it. I'm just wait for it. But I was like, hey, actually, Natural Grocers coming here makes Trader Joe's need to be here actually better now and more efficiently because hey, they have to give market share. Hey, where's one go? So Spokane's coming down. We have opportunity. It's weird, but like just get to know us, and it's not so weird.
I love that. Just get to know us. We're not so weird. Awesome. If people want to reach out and contact you, learn more about the products that you might have for rent, for lease, for sale, what's the best way for them to do that?
Most of our handles are at Stricker CRE, STRICKER CRE, Instagram, YouTube, Facebook, LinkedIn, Derrick Stricker, and my other stuff. But we got there. I got a little marketing team. We have a lot of listings going live. And we're doing something different with our stuff. We're trying to approach it. We want to give you guys the information easier so we can interact better. And so stay tuned for all that kind of stuff.
Awesome. And we'll make sure all of that is in the show notes to make it very easy for people to be able to click and contact you. Derrick, thank you so much for your time today. Really appreciate you spending some time with us on the podcast.